Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Thursday, 11th September. Coming up on the show, consumer price inflation is out later this morning. It's expected to show that prices remain sticky in August. The largest IPO of 2025, Klarna, was a hit on its first day of trading on Wednesday, but it wasn't alone. Meme stock Opendoor gets a new CEO. And just who is the richest man in the world right now? So grab your coffee and let's own the morning. Well, the first thing you need to know about is, again, all about inflation. August Consumer Price Index, CPI, is expected to show inflation remained sticky last month, with headline prices rising at a faster clip than in July. The report will be closely watched for signs of how much President Trump's tariffs are impacting consumer costs. So far, the impact has been limited, reinforcing expectations that the Fed will cut rates next week. Expectations are for CPI to rise 2.9% year over year, up from the 2.7% increase seen in July. On a monthly basis, prices are estimated to rise 0.3%, a touch firmer than July's 0.2% gain. Now, the next thing you need to know about is the Oracle effect. Thanks to the US software giant's near 36% surge on Wednesday, Asian tech stocks had a fire lit under them today. That in turn sent many of the markets up in the region, with Japan's Nikkei and South Korea's Kospi hitting record highs. One stock to note in particular, though, in Japan is SoftBank. It's one of Oracle's Stargate project partners, and its shares were up almost 10% on the Tokyo Stock Exchange. Now, Oracle is doing well because of its shift towards AI cloud infrastructure. That's in contrast to purely AI services focused firms that have been suffering in recent weeks. So, for our last thing to know, we're going to focus on Adobe. It reports Q3 earnings after the closing bell today. Fierce competition from both tech giants and fast-rising AI startups, along with the slow pace of monetization of the company's AI solutions, has kept investors on the sidelines. Shares in Adobe this year alone are down by over a fifth. And another company in this space that's not had a stellar year, and for much of the same reasons, is Salesforce. Its chair and CEO, Mark Benioff, sat down with our executive editor, Brian Sozzi, at Goldman Sachs' Communicopia Plus event in San Francisco. He told Brian all about how he wants to reshape the firm. Take a listen to this.
Even in customer service, we don't have 6,000 to 8,000 customer support agents anymore. We're down to about 4,000.
In Salesforce?
At Salesforce. And we've rebalanced that headcount actually into sales. Now we have about 3,000 or 4,000 more salespeople. And we're rebalancing our headcount. And let me tell you how I think about this, because it's changed since the last time that I saw you. We're building the technology at Salesforce to create these agentic enterprises in sales and service in different areas. We can go into more examples. But we're also going to be a best practice. I'm going to reshape my company. I'm going to change how many people I have in support, how many people I have in sales, how many I have in marketing, how many I have in field service and finance and all of these areas based on the technology I'm building so that I can show our customers what they can be. I mean, you just saw we had record cash flows because of that $15 billion this year. It's pretty incredible what Salesforce has become.
So more revenue, less people. This is like a holy grail moment.
Well, not necessarily less people. We actually have more people than we started with the year, but certain functions are going to get reshaped, rebalanced. You're going to be able to shift, move things around. It's exciting for a CEO. You don't have to think about, oh, I have to have only this many people in this one cost function. You know, you're going to be able to shift things around based on, you know, using technology, and you'll be able to create a more dynamic company because of it.
Okay, well, the AI race is certainly hotting up between the US and China. Jared Blickery has this in his Stocks in Translation.
NVIDIA CEO Jensen Huang recently talked about the U.S. tech stack and how it compares to China's. He even threw in the U.S. dollar in the same breath, which caught the eye of President Trump. If you're scratching your head wondering what is this tech stack, sit back, because today on Stocks in Translation, we're going to break that down for you. Now, first, let's take a listen to what Jensen himself had to say to Yahoo Finance after NVIDIA's recent earnings.
The American tech stack should be the world standard. Just as the American dollar is the world standard that economies are built on, we want the American tech stack for the world's technology and industries to be built on. And that includes China.
Now let's define this term. In tech, a stack is already a metaphor, a layered view of how the parts of technology work together. For AI, you can think of it as a hierarchy or a stack with hardware at the bottom all the way up to the apps you use at the top. And here's how it breaks down by layer. We have applications at the very top. That's chatbots, design apps, and company tools people actually use and touch. Below that are platforms, the basic software tools used to build and run those apps. Then comes the infrastructure, which is the cloud and data centers, big facilities running services and AI. And on top of all of that, it's built on the hardware layer. That's chips, servers, and the equipment that connects them. So how does the tech stack compare to China? In this chart, we have each bar is a country with the US at the left and the China at the right here. Each color is a different layer of the stack, and it's in the same order as before. We had to make a lot of assumptions to get these numbers, so take them with a grain of salt. And what we're attempting to measure or estimate is the annual flow of revenue or sales for the hardware and software items. And for infrastructure, by the way, we're using capital spending instead of sales. The devil's in the details, as they say, but when you add it all up, it's easy to see that the hardware layer alone in the US, that's in the bottom in white, that is larger than the value of China's entire stack. And it all totals to about $725 billion annually in the US compared to about $125 billion worth for China. So why bring up the business of the US dollar dominance? Because the dollar is the world's reserve currency, which is a widely held national currency used to trade, borrow, and save across borders. Reserve status means it's trusted, easy to move, and accepted everywhere. And now we can compare how widely the US dollar is held versus the Chinese yuan, its currency. If you add it all up, the world's currencies held by all the central banks, it comes out to the equivalent of over $12 trillion. And the US dollar share of that is just under $7 trillion, which means that the dollar makes up about 60% of the pie worldwide. And that compares to about $250 billion for China, or just under 2%. And getting back to Huang's original point, we can now compare US tech stack dominance to that of the US dollar. Here we have these two worlds side by side. The US tech stack is about 6 times as big as China's, so that ratio is 6-1. Meanwhile, the dollar's holdings are about 25 times that of the Chinese yuan, so that's a 25-1 ratio. In other words, the dollar is much more dominant than the US tech stack. And just to be clear, this is a very apples to oranges comparison. But the whole purpose of this exercise is to view the global AI race from the perspective of the leaders that are shaping it, not only on the tech side of AI, but also on the government policy side. It's also an interesting way to think about relative scale. And the bottom line is, think of the tech stack as today's competition for global standards, like the dollar in finance. The US leads it for now, but the race is definitely on. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Stuff there from Jared Blickery, as always. Okay, it's time for a short break, but when we're back, we're going to take a deeper dive into the world of IPOs. Welcome back to Market Sunrise. Well, let's talk about IPOs. Klarna's blockbuster IPO yesterday was the biggest of the year, and it valued the buy now, pay later company at one point at $20 billion. It's now at around $17 billion, down more than 3% in the pre-market. And just as the company was pulling off its much anticipated IPO, CEO of Klarna, Sebastian Siemiatkowski, came on Yahoo Finance to share his perspective. Before we listen to his interview with Josh Lipton, though, I want to give some context as to why this is so significant. This week is one of the busiest IPO weeks in years. On top of Klarna, we've seen blockchain lender Figure going public, and we're expecting several others, notably Legence Corp, a maintenance services provider backed by Blackstone, Via Transportation, offering public transit solutions, and Gemini Space Station, a crypto stock. All of these are scheduled for the second half of this week, and we'll be covering IPO news here on Yahoo Finance. Now, with further ado, let's hear from our interview with the CEO of Klarna.
Klarna is now at 111 million users. which is pretty amazing. We've been growing, and our main focus for the last decades have really been how do we reach as big of an audience, how do we get as many users as possible, and then more recently we've been starting to focus on how do we sell more services and increase the revenue per user, right? And so you look at us compared to some of our competitors, there are 1/3, a firm is like I think 30 or 25 in total. We have Revolut in Europe that is 40, 50 million users. Klarna at 111 million users, but our revenue per customer is lower, and that's where the big opportunity is. That's why we're very, very happy to see, for example, we launched a card just 6 weeks ago here in the US. We now have 700,000 users, 5 million people on the waiting list. So we see a lot of opportunity on how we can bring more financial services once we have established that relationship with them and they use us for a buy now, pay later at Sephora or Macy's or Walmart or eBay or all the merchants that offer Klarna today.
Sebastian, for investors who are listening right now, why should they put money to work, Sebastian, in Klarna rather than your rival Affirm, which analysts are quick to point out, Sebastian? Affirm, they say it's growing faster and it's more profitable.
Well, I think that the truth is that, like, if first and foremost, I haven't sold a single share today. I'm a big believer in the company. I'm a big believer in the opportunity. Klarna is a very different business. Our focus has really been about growing in the pay in force space on the everyday transactions. You've seen us sign Uber, you've seen us sign DoorDash. Our experience is that the most critical thing is to build relationship with a lot of customers. We have more customers than Affirm here in the US as an example, and more globally. So first we build a relationship. We know this from Europe. We build that relationship. We become an everyday spending partner for the users, and then we can start upselling, whether that's fair financing, longer term financing loans like Affirm does, or whether it's other services like subscriptions and cards and other offerings that we're doing in Europe. And what we see then is that people really love those. If you look at some of our card users, our revenue per user there is 5 to 10x higher than the standard user. So that's a huge opportunity here. But our main focus has been growing number of users, and now we're coming into the monetization.
One question I hear asked, Sebastian, and I'm curious to learn more about this, and to make sure I'm understanding correctly, is that you all go to Pagaya to help underwrite long-term loans in the US. I'm curious why you do that, why you outsource that, Sebastian, because it's pointed out that Affirm, they don't do that. They actually own the underwriting IP.
Yeah, that's not entirely correct. So what happens is that Klarna is a bank. We're a fully regulated bank, different than Affirm, and we put most of our loans on our own balance sheet. We underwrite them ourselves. That's also a very big difference, and if you look at it, is that, like, because of that, we recognize the provisioning of our loans directly, while the revenue comes over a longer period of time. Affirm is selling off about 50% of it to partners. Pagaya is a great partner, a small partner. A small proportion of our loans in the US are underwritten by them and given them, but the majority of all the loans are underwritten by ourselves. 97% of our loans are 0% interest bearing, and we have been doing underwriting for fair financing and for longer term tickets for 2 decades. So it's not entirely correct. We do most of it ourselves, most is on our own balance sheet. But that also means that as we grow now quickly the fair financing product, as we grow, for example, one Walmart and start working with Walmart away from Affirm, this means that we will see a growing amount of those loans, and the revenue will come over the coming quarters because it's more profitable. Our funding with deposits is just much cheaper than selling it off wholesale like Affirm does.
So just so I understand, Sebastian, so when you're assessing the risks of making a loan to Josh, you're doing that. You're not outsourcing that.
Nope.
Got it. Let me ask you this. We talk a lot about AI on this show, Sebastian. I just want to get a better sense of how you're leveraging that for your business now and ahead.
Sure. I mean, there's been a lot of writings about that. We were very early to apply AI in our customer service that saved us about $40 million and increased our quality. I would say the most important thing, we took our average response time from 12 minutes down to 2 minutes, so customers were much happier as AI was much more responsive, faster. So that's been great. We've also had significant implications on our OPEX.
All right, it's time for a quick break now. We'll be back with trending tickers and the answer to the question, who's the world's richest man? All right, time for trending tickers. And first up, Opendoor. It keeps surfing its viral moment. The stock is extending its dramatic run up and up again. That's nearly 30% this morning in pre-market to around $7 and almost 35%. Now it's $7.91. The new impetus comes on the back of intense retail interest. The meme stock momentum continues, fueled by chatter on social media. Some information keeps being recircled. For instance, the fact that back in August, one of Opendoor's top executives bought 30,000 shares. That keeps getting Redditors excited. But today, there's also some real news. Opendoor announced that Kaz Nejatian, COO of Shopify, will join Opendoor as the company's new chief executive officer. In its core business, Opendoor has been under pressure from higher interest rates, but the speculative momentum has only gained steam in recent weeks. It's now up nearly, get this, 900% in the past 3 months. All right, next up, it's Alibaba, and it's in the news again today. The US listed shares of the company that's usually dubbed China's Amazon are up around 3% in US pre-market trade. This comes amid reports that the tech giant is leading a new tech funding spree with a $3.2 billion deal. According to Bloomberg, Alibaba is set to raise more than $3 billion in an offering of a zero coupon convertible note. That cash will be used for things like data centers and is set to give yet another boost to Alibaba's huge ambitions in AI, cloud and infrastructure. Alibaba stock has been rising in recent days on its growth across the AI space. That includes a powerful AI model announced a few days ago, as well as big plans in cloud services and software applications. Two reminders here. First, Alibaba is still trading much lower than a few years ago, but many investors see promising signs of a comeback, even as other economic indicators in China are still lukewarm. And finally, Alibaba is present in Europe, Africa, and a number of other geographies, so these moves will have ripple effects around the world. And finally, Synopsis, another heavyweight AI software firm that's been suffering heavy losses in recent days. The chip designing company is recovering some of those losses this morning in pre-market, up around 4%. But listen to this, Synopsis closed down more than 35% yesterday, erasing tens of billions of dollars in market value. This came after its latest earnings report, which really wasn't that bad. Synopsis guidance was relatively upbeat. But there's one thing investors really didn't like. Earnings per share missed forecast, and the company warned that US restrictions on chip exports are going to weigh on demand in China. Why is this such an important story? It's another reminder that in the red-hot AI and semiconductor space, expectations are sky high, and any stumble, well, it gets punished. Now, if you think that artificial intelligence was the most lucrative trade this year, some analysts say think again. Gold is up 38%, outpacing tech by certain measures. That's the argument Keith Lerner from Truist Wealth made here on Yahoo Finance yesterday. And this morning, gold is still trading just below that $3,700 mark. But can this seemingly unstoppable momentum continue?
We all know there are a lot of potential headwinds, and going back to the question earlier, the future is unpredictable. You can have a scenario and you can look at the weight of the evidence and the data. That's how we make decisions, but you don't know what tomorrow brings. So you want to have things in the portfolio in case an outcome changes. And we've been positive on gold all year long. It's actually up, more than tech. It's up, 40% this year. And after moving sideways for about 4 months, it just broke out recently again. And you're seeing central bank buying. And when there's some questions about political instability, the change in kind of the U.S. on the global scene, you're seeing central banks around the world increase their holdings of gold as well. So to us, it's a modest position, but we still think it's a good diversifier. And the last point is, when we've seen days where stocks and bonds are both down, we're seeing that gold is actually providing good diversification, being up on those days, providing that offset the majority of time.
So just who is the richest person in the world? Well, up until yesterday, that was a pretty easy question to answer. It was Elon Musk. But after Oracle shares surged about 43% to a record high at one point on Wednesday, it propelled co-founder Larry Ellison to the top of the world's richest list. But shares slipped off that intraday high, still closing up almost 36% on Wednesday. But that meant that Ellison slipped to number 2 behind Elon Musk. Now, 81-year-old Ellison, whose net worth is largely derived from his 41% stake in Oracle, saw his fortune rise by about $100 billion to around $392.6 billion. That's according to Forbes. It later fell to around $383 billion. He is rapidly closing in on Tesla chief Elon Musk in the race for the title of the world's richest person. Musk's net worth last stood at $385 billion, so not a lot between them. Now, Oracle will add about $234 billion to its market valuation, taking the total to around $913 billion if gains hold, and bringing the company closer to the coveted $1 trillion club. Now, the share price for Oracle was boosted by the database software company's surprisingly rosy outlook for its cloud infrastructure business and AI deals. Musk had held the title of world's richest person for nearly 1 year. He could receive a pay package worth over $1 trillion if he hits a list of ambitious targets over the next decade. But shares in Musk's most valuable business, Tesla, have fallen this year. The EV maker has grappled with investor jitters over the Trump administration's rollback of electric vehicle initiatives, on top of consumer backlash to Musk's political involvement and stiffer competition, especially from China. Now, Oracle has recently been propelled by growing demand for data center infrastructure. The company projected as part of its quarterly earnings report on Tuesday that revenue from its cloud business will jump 77% this year to $18 billion, with further growth expected in the coming years. Okay, before we go, let's have a check on the markets. We start in Asia, and obviously they all got a boost off those Oracle earnings, and the shares across the region were higher. SoftBank, as I said, up 9%. But look at China. That was actually the CSI Shanghai Composite's best performance, daily performance since 2022. Let's move over to Europe now as well. And European shares are mainly in the green. Don't forget, we have the European Central Bank. They make their interest rate decision very shortly. Rates are expected to be kept on hold there because inflation is in line with the ECB's inflation targets. The FTSE higher there, helped by some really encouraging reports from some companies in the UK. Okay, and let's have a quick look at where US futures stand before we get that CPI print. And everything's just hovering just above the flat line there, about a fifth of a percent higher for the S&P 500. Obviously, all eyes will be on that CPI report later today as well. But, you know, stock still trading near record highs. Okay, well, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.